No human trader or trading models created by humans can guarantee a win rate of 100%. You all know this. Okay, maybe ChatGPT has a pretty good chance to asymptotically approach that 100% win rate in the near future, but that's an entirely different topic altogether. I'm obviously far from perfection, and in today's quick video, I want to walk you through something a little bit different. I want to share with you a recent setup I found on NASDAQ, but it didn't go so rosy for me. Let's look at NASDAQ during New York session on Wednesday, 12th of April. You can see the continuously expansionary behavior over several days, clearly on the 5-minute or 3-minute chart, with a lot of sell-side liquidity built up. And since the 6th of April, even though we haven't exactly seen any strong bearish break of structure, we see an awful lot of upside exhaustion. And then 8:30 a.m. news sent NASDAQ skyrocketing and took out multiple buy-side liquidity pools. Checking the 3-minute chart, I saw a mild bearish break of structure. However, I wasn't convinced NASDAQ was going to turn even more bearish for the rest of the New York session, even though part of me really wanted to place a sell limit in the 3-minute fair value gap right here. My idea was to place a sell limit here and have my stop loss somewhere here, just slightly above the last sign of exhaustion, and then the liquidity level down here. Or maybe slightly less ambitious, I can go for something like this. So my TP would be just between the two liquidity pools, just to be a little bit more realistic. And that's a 2.36R trade. That was my initial thought. But then this break of market structure wasn't too strong for me to be convinced to enter this trade. So I waited for another break of structure, which did happen. I'm gonna replay this for you. So I waited for some more, and on the 3-minute chart, this was my second break of market structure. And at that point, if you go back into the price action that happened prior to that, this is a classic ICT trade, right? So we've got a beautiful whip up here. This is considered the New York kill zone Judas swing, which took out a lot of the buy-side liquidity levels. And then we have a change of character, and we're turning bearish here. And then this second break of market structure was giving us an even stronger sign to start looking for sell opportunities. But I didn't take this one, and after this market structure break happened, I didn't enter anything. I was feeling rather conflicted about whether or not I should place a sell limit. I mean, looking at the chart, it is a classic ICT trade that's likely to work out in my favor, but I was not confident enough to take the trade. So my setup looked like this. The second setup that I had in mind looked something like this. And the reason why I thought about placing a sell limit here was because can we see a little beautiful fair value gap here that's also on the 3-minute time frame. So I thought about just entering a sell limit here and then have my stop loss somewhere here also, just to be safe. But that's an enormous stop loss. We're talking 126 pips, and the downside wasn't exactly attractive in relation to the risk involved. I mean, if you look at it, it's barely one. I wasn't too happy. Not only was I not confident enough to take the trade, in retrospect, of course, it did turn out to be a largely profitable trade. We're talking 140 pips, perhaps. But at the time, I wasn't too excited about the low risk to reward ratio. Plus, in my mind, I was very nervous that price might just tick up yet again. and hit my stop loss as it goes on to draw on the buy side liquidity here. I believe I entered a sell limit somewhere just here in the middle of this second 3-minute fair value gap. Let's just let the price run for now. Right, so that's 148 pips backed if I did not close my trade here. So what actually did happen was I was so unnerved, I ended up closing my trade right here when it was when it was ticking up and it was looking to go above the second 3-minute fair value gap, and that's about 16 pips lost. So I entered here and I closed here. Instead of giving it some time for this classic ICT trade to actually move in my direction. So if we break this down a little, I believe my lack of confidence comes from inadequate forward testing with NASDAQ. Even though I did plenty of back testing, given its wild volatility, I should have built my confidence for trading it by doing some more forward testing in a demo account before taking it straight from back testing to live trading. My other mistake was that I entered this trade with an average lot size instead of using an extremely small lot size, as I should have, considering my inadequacies and lack of confidence. The loss of 16 pips or so totally could have been avoided if I simply did not trade this one until I had some more forward testing done to trade NASDAQ with the right level of confidence and conviction. Or if I entered a small lot size that put below 0.3% of my equity on the line. That way, my tolerance for the temporary uptick would have been higher and my mind would have been more at ease and allowed me to just let that trade run until it hits my target, which it did in reality. It tapped into this zone just to draw on the liquidity, right? So now we have reviewed this case. Was there something in here you found particularly relatable? Do you also sometimes close an otherwise profitable trade way too early for either a small loss or break even due to lack of confidence or a lack of forward testing, or you simply entered a trade size that didn't work well with your actual risk tolerance? Let me know in the comments below. I shared this case study with you today in the hope that understanding concretely what you should not be doing, it also brings you several steps closer to success. That's right, this has kind of been my logic lately. I mean, there are thousands of ways preached by so many mentors and coaches online telling you to do this and that. But through my experience, I recently realized that instead of spreading ourselves thin over the many things to remember, simply turning our attention to the small handful of things we should not be doing, we can win the battle too. I hope this video has helped you in certain ways. I hope you enjoyed this quick video.